You invest some money, let it sit, and then one day, boom, you get paid just for holding on to it. That's the magic of dividends, and it's what got me hooked on SCHD. My portfolio isn't massive, and I'm not here to flex unrealistic numbers. I'm here to show you the real deal, my gains, my losses, and why I'm sticking with SCHD through thick and thin. A couple of years ago, I hit a point where I just thought, is this it? Clocking in and out, trying to save, and feeling like I wasn't making real progress. Then the pandemic hit. Like a lot of people, I found myself in a tough spot. I got sick and couldn't work for a while. That's when I realized I can't let life catch me off guard like that again. I needed a plan to build financial security. I started learning about investing, and what caught my attention was the consistent, reliable growth you could get from dividend-paying stocks and ETFs, like SCHD. It's not about getting rich quick. It's about building a foundation. SCHD isn't about flashy gains. It's about letting time do the work, and I'm all for that. Here's the deal with SCHD. It's built for investors who don't want the drama. SCHD does all the heavy lifting for you. It tracks the best dividend stocks, keeps the fees ridiculously low at 0.06%, and pays you dividends every quarter. That's money coming into your account no matter what's happening in the market. And when those dividends roll in, you reinvest them, and your portfolio grows even faster. Over the last decade, SCHD has delivered steady returns even when the market's had its moments. All right, let's get real for a second. The red numbers. Nobody likes seeing them, but they're part of the deal. My total investment in SCHD sits at $4,105.50. Right now, it's worth $3,932.20. So yeah, I'm down $173.30. Does it sting a little? Sure. But am I losing sleep over it? Absolutely not. Why? Because I didn't hop into SCHD for quick wins. I'm playing the long game here. I'm looking 10, 20 years down the line, not 10 weeks. These losses, they're just temporary paper cuts, not permanent scars. What is permanent are the dividends SCHD keeps pumping out like clockwork. And because I reinvest those dividends, I'm scooping up more shares while prices are low. That's not a loss. That's an opportunity to grow. Here's the truth most people don't talk about. Investing isn't a smooth ride. It's not all green arrows and record highs. There are dips, red days, and stretches where it feels like your money is stuck in neutral. But that's just how the game is played. The market's ups and downs are like waves. You've got to ride them out to get to the calm seas. The thing is, I don't sweat the red days because my dividends don't care what color the market is. My second payout from SCHD came in at $37.80. Now, $37.80 might not blow your mind, but for me, it's a big deal. That payout went straight back into buying more shares of SCHD. Those new shares, they're going to earn me more dividends next quarter, and then those dividends will buy even more shares. The snowball starts small, but as it rolls, it picks up momentum. One day, it's a powerhouse you can't stop. This is where the magic of compounding kicks in. Those small wins, like reinvesting a $37.80 dividend, are laying the foundation for future growth. Every dollar I put to work today is a brick in the wall of my financial future. That's why I'm not fazed by a $173.30 dip in value, because I know that over time, the dividends will keep stacking, the shares will keep growing, and those red numbers, they'll turn green before I know it. So if you're seeing red in your portfolio, don't panic. Think of it as a long-term investor's discount sale. The key is to stay consistent, reinvest, and let time do its thing. This isn't about timing the market, it's about time in the market, and that's how you build wealth that lasts. Let's talk about something every investor faces but nobody likes to deal with: what to do when the market isn't going your way. It's easy to feel like hitting the sell button when you're staring at red numbers, but that's the last thing you should do. This is where the real money-making mindset kicks in. So let me break it down for you. Here's how I handle it. Whether it's $5 a day, $50 a week, or $500 a month, consistency is everything. The market doesn't care how much you're putting in. It rewards the people who keep showing up. Timing the market? Forget about it. That's a fool's game. Nobody wins. The real secret? Time in the market. That's where the wins are made. Every dollar you invest today is a step closer to building that snowball, so keep rolling it, even if it feels slow at first. Here's the part that makes me smile even on red days: dividends. With SCHD, it's like getting a bonus just for showing up. Those payouts don't care if the market is up, down, or sideways. They keep coming. And when you reinvest them, that's when the magic of compounding starts working in your favor. Every dividend you reinvest is like planting a seed that will keep growing and producing more over time. It's the ultimate passive income move. Now, let's reframe the red days. When the market dips, it's not a disaster, it's a sale. Imagine walking into your favorite store and seeing everything you love marked down. That's what a market drop is to an investor. When SCHD takes a dip, I'm not running for the exits. I'm grabbing as much as I can. Lower prices mean more shares for the same money, and more shares mean more dividends down the road. That's the long game, and it's how you turn market dips into big wins. This one's big. Stop staring at the day-to-day numbers. If you're glued to the charts and obsessing over every little movement, you'll drive yourself crazy. Investing isn't about what happens today or tomorrow. It's about what happens over the next 5, 10, or even 20 years. Zoom out and look at the bigger picture. Ask yourself, where do I want to be a decade from now? That's the timeline that really matters. When I see my portfolio dip, I remind myself, this isn't the end of the story, it's just a chapter. And every chapter has ups and downs. The key is sticking to the script, staying consistent, and trusting the process. So whether you're riding high or dealing with a rough patch, remember, you're not in this for a quick win, you're in it for the long haul. So the next time you're feeling the sting of red numbers, take a breath, stick to your plan, and remember why you started. You're building something bigger than just a portfolio. You're building a future. That's what it's all about. SCHD might not make you a millionaire overnight, but that's not the point. It's a steady, reliable ETF that gives you peace of mind. No wild swings, no sleepless nights, just consistent performance that keeps your money working for you. As a busy nurse with back-to-back shifts, I don't have the time or energy to obsess over stock charts or chase the latest hot picks. I need something that works quietly in the background, letting me focus on my life while still building for the future. Now, my portfolio, it's far from perfect. There are red days, setbacks, and those moments when the market makes me question everything. But I'm okay with that. Every single share I buy and every dividend I reinvest is a step closer to the financial future I'm working toward. It's not about where I am today, it's about where I'm headed. And that's the beauty of this journey. It's not flashy, it's not instant, and it's not going to make headlines. But it's real and it's reliable. And at the end of the day, it's not about quick wins, it's about steady progress. What about you? How do you handle those red days in your portfolio? Do you see them as setbacks, or are you scooping up deals while the market's on sale? Let me know in the comments. I'd love to hear how you're navigating your own investing journey.